Phoenix of the team.
All right, ladies and gentlemen, welcome back to another chart talk. Let's jump right into it. Let's get into the market outlook. So last week, market was under some pressure. We're looking at the S&P right here, the SPY, S&P futures. And we saw stocks roll over a bit last week. We closed the week very weak, Thursday and Friday. We're still intraday, about 12:30 noon Eastern. Monday right now, we're seeing stocks bounce back. Not sure if this is, the bottom for the next move higher, if there's a dead cat bounce. We're seeing it pretty market wide right now. You can see on the heat map right now, it's just everything is green. The way we closed Friday, the way they gapped this market up, it wasn't very appetizing buy right off the open, I'd say. So we'll see how this closes. But I mean, on a chart, we are still within this trend, this upward trend. We're seeing change of leadership, into the more cyclical stocks, the reopening stocks. As the country begins to reopen more, and that's kind of the rotation we've been seeing over the past couple weeks. That's really it. It's just kind of will this area hold? Will we have another leg down? Will this propel the next leg higher? That's what I'm kind of waiting to see. I have my foot off the gas, definitely by far. What are you thinking over there, Bennett?
So again, that's just my take. I think that we've seen this basically since the beginning of April. We've seen these very easy kind of breakout markets for a few months, and then we see these very short periods of consolidation, or we refer to it as range-bound markets, or you can call it like a flag. And we saw this in June. We saw this in kind of September to August. We saw the market range-bound. And we're starting to see, or what I'm starting to expect, is us shifting into a little bit of a range-bound market, just as we're kind of near this psychological level of 4,000 in the SPY or 400 in the S&P. I think we kind of shift a little bit more range-bound. But again, as long as we keep putting in these new higher pivot lows, currently it's at 377 area. And if we take out 395 to new highs, then the trend continues. But that's just kind of my thinking, is as we kind of shift into more of a range-bound market for a little bit before we get that next real leg higher.
All right.
So with that, let's jump into some of the top ideas for the week. Sheikh, let's start off with Tesla.
So I mean, this goes back to if you believe this market's going to hold, has a decent pivot. I don't see anything on a chart, but it's been a market leader, so I can't knock it. If this wants to bounce back, it should bounce back pretty hard. But if it wants to fail pretty hard. I don't have any personal interest in Tesla here at these levels. Not much of a setup on the daily chart, just kind of buying the dip. So I mean, if you believe this is the dip, then that's your take on it. I'm playing wait and see right now.
All right, next up, what about Snow? SNOW.
Snow has earnings after the close on Wednesday, so we'll visit it then.
All right. Next, DECK. DECK.
Nice. All right, I like this one. And you can see, you look at the last two charts, they're names that have come off highs a bit, but they're hot names, sexy names that people want to buy. This DECK, Decker's Outdoor Apparel, not the sexiest name, but look at this chart, flagging at least 52-week highs, I don't know. Flagging at all-time highs. So this one looks very good. You can tell this has demand. The money's flowing to these areas of the market. Retail. The market's up today because of the stimulus bill that was signed over the weekend. It wasn't signed. It's just going to the Senate right now. But theoretically, that gives more money to consumers, so that should help out retail and these reopening stocks. And that's why things like Deckers are so strong.
All right. Next, let's go over Uber versus Lyft. Which of the two would you think have a better setup in them?
I mean, chart-wise, I've been saying it's Uber for the whole time, but chart-wise right now, this Lyft looks a lot better on the chart. So, I mean, it's got the earnings move. Now it's trying to consolidate this move in time through 60. Looks really good. Versus Uber, which just came in like 10, 15% off highs, just kind of chopping around. So from a technical standpoint, Lyft actually looks better to me. I think Uber's the better company, but, charts don't lie, and that Lyft flag is much healthier than whatever Uber's got going on in their chart.
Mm-hmm. All right, next let's get into two of the big ones that broke out off your newsletter. We have DNKG, DraftKings.
DKNG, yeah, DraftKings.
Is there why am I not pulling this up? So do you, I know you're already in it, but is there any current game plan for DraftKings?
I mean, if the market sells off and we get a pullback to 60, I'll look to add even more than I got. It gapped and gold this morning, made it really difficult to get ads in. I've been pounding the table on this one for a while, so it's finally breaking all-time highs on huge volume, on great earnings, great chart pattern, great sector. This is an A+ setup to me.
All right, and let's move over to MasterCard, MA.
Yeah, I mean, look at these names, MasterCards, the Visas, these payment processors are so strong. there's a really nice level here, this 370 area, whatever it is. I said on the newsletter last night, this name should definitely be in focus. We saw how strong it was all week. Didn't pull back too much. And then market catches a bid, and it's already back up at these levels. So if we get some sideways action before this 370, then that's definitely a buy.
All right. And then last up, we have this Netflix. NFLX.
Yeah. I like this Netflix. I mean, I'm waiting to see what happens here. I mean, you can't knock the chart pattern it's got going on. Beautiful consolidation at highs, kind of in the middle of its range. It's got this really tight, somewhat tight, relatively tight area, 520 to 560 on the daily. If it breaks above that 560, then it looks pretty good. It looks pretty good for new highs through 600.
Nice. All right, so I only had one more I want to add in, kind of going off the MasterCard, is this Visa through 220. Again,
Yeah.
Visa, MasterCard, all these credit card processes have been in play, very strong. And this up through 220 is definitely one that we can see, once we take it out, some new highs in the future. So with that, Jake, we wrapped up some of the top ideas for the week. The one main question we had is, what is a game plan?
So, a game plan, you should enter every single trade with a game plan. We've been seeing a lot of bad habits form because the market's so easy. And I get like these private DMs about like, oh no, I bought this stock. It's coming back to my price. What do I do? And it's like, you should never be in that situation because you shouldn't click a button without having a game plan. Now, a game plan all revolves around, let's look at DraftKings, for example. And it depends on your time frame. The macro time frame on this DraftKings, we were trying to buy this 63 area. We were trying to give it to this 57 area, so we're risking $6. So we want to make, let's say, 30 on the upside for the 5-to-1. But you want your risk to be quantified in a game plan so that you know where your upward price targets are, you know where you're looking to take profit, and the most important part is that it cuts out the emotions. You know where you're selling it if everything goes wrong. You know where you want to buy the stock. You know where you want to take profit. So a game plan, the idea of it is just taking all the thinking out. You do all the thinking beforehand, so then when you buy the stock and emotions get involved, you're not making any improper decisions based off emotions. That's why we game plan so hard.
So like what Shake said, the three main things regarding a game plan. First, you want to know your entry. So like for DraftKings, Shake was saying he was looking to buy 63. The stop is where we want to know where we're going to get out if we're wrong. And then from there, we determine our target, which is going to be 5 times, what we aim for is at least 5 times the risk. We're risking $1 a share. We're buying 63. We're looking to sell it at 68, $5 higher. If we're risking 5 points, it's the same thing. So you want to know your entry. From there, you want to know where you want to get out when you're wrong. And then lastly, you want to determine where you should be selling for profit when you're right. So that's a simple game plan. Hopefully that helped address that question we kept getting asked in the Getting Started group this week. So with that, Shake, if you want to jump into some of your good and bad trades.
Yeah, I mean, this DraftKings is the best thing I have going on. I've been pounding the table on this stock forever. And honestly, the best trade I did all week was de-risking. So last week was a very difficult week in the market. 2 reversal up days, 2 harsh selling days to close the week. Very difficult to make money on back and forth action like that. I didn't really participate. I went into a lot of cash the previous week. So that was definitely the best thing I did. And the only trade I took last week was Apple on this day right here. I bought 126, got stopped out 124. It was like a 20-minute trade. That's the only risk I put on last week. It's starting to look better now, but I mean, I wasn't too hot on the market last week. I avoided some pain, and I think we're all learning. Coming off this year of just incredibly easy trading, if you will, everyone's a market guru. Everyone's a professional trader in a bull market, right? So I think these times of consolidation are good to remind everyone, trading is not always the easiest thing in the world. So avoiding the bad is just as important as, taking part in the good.
Mm-hmm. Definitely agree. All right, Jake, so I got 2 quick ones if you want to pull out. The first one's just Amazon. If you want to pull the chart up.
Got it. Yeah, it's up.
All right. So again, Amazon, we talked about the prior chart talk when we were buying it up through 3,300 when it failed. As Amazon started to pull back into this, 3,100 area, we were talking about the group of, again, we very rarely use limit buys. They're very low probability orders when you're buying kind of against the trend, but sometimes you can get very good stock on very low risk. So seeing this 3,100, 3080 area, I had a limit buy in at 3,100 above that kind of area support, knowing that if it kind of blows through that 3080, I'm basically going to get out of it. I bought it that first day. It was immediately up about 100 points in my favor. And that, when you get that good stock, you kind of expecting it to kind of continue higher and get back up to that 3,300 area, where that just wasn't the case here. So as it rolled back over, just took the loss break even, and that was the plan. Originally, I had that stop versus that low a day versus 30.80. After that second day, had that inside day and started to roll back over. It was pretty obvious that this was going to be a failed trade. So instead of just losing, the 30 or 40 points, I took it up break even. And again, like Shake said, wasn't really doing much last week, where this was a initially good buy. I just didn't capitalize on it, but I wasn't looking to sell that day one anyways. And then secondly was this FBHS. This was a name. Shake, do you have the chart up?
Yep.
Okay. So this is a name again. The macro setup is through that 92, 93 area. We were looking to buy it up off support, and we saw that 84 was holding. Now, before kind of the craziness of last week, when things were somewhat easy, I had gotten in up through 88, and given the market's volatility, I kind of got a little trapped in it. And knowing 84 is basically the clear, shakeout area, I normally would have just had a stop below 84, and it would have just shaken me out. Knowing that and being willing to kind of give these names a little bit extra room, I gave it the extra day. It flushed down through 84. It held that figure lower, 83, and today it's reversing back to about my price. So now I know my hard out in this stock is versus 83. So my stop's 82, 89. I'm still risking, 5 points in this name, which is more than I would like to, but that's just kind of where I bought and, where the stock sold off to. So those were the two for last week. And again, like you said, Shake, a lot of it was just more or less doing nothing and just kind of sitting in cash, waiting for, those better opportunities.
Yeah.
So those are my main two. Shake, if you want to go into your book of the week, and I'll go over mine really briefly.
Oh, I'm still reading the Hunt Brothers, but I got a great book I'm reading on the side. It's by Jerry Seinfeld. Jerry Seinfeld, Is This Anything? It's hold on. Is this? It's so what he did was he wrote down all of his jokes ever from the 70s to the 80s, the 90s, 2000s, and it's just every joke he's ever written down from his thing. So like you're trying to fall asleep, you want a quick laugh, you read a couple pages, get your eyes tired, get a good little laugh. It's great for next to bed when you just want a few jokes. So good.
Nice. That's almost like if you ever read like the Tucker Max books. Like I hope you.
No, it's not. Don't.
No. Okay.
No, it's not.
Anyways,
I fucking hate Tucker Max. All right, let the record be shown.
All right. Well, I finished Atomic Habits last week. That was a really great read. Took me a little while, and I just finished. I had The Crowd. Honestly, I wouldn't recommend it. It was for as short
Gustav?
of a. Yeah. Yeah. So I wouldn't necessarily recommend this book. Again, it was very short, but a very dense read for how little it was. It wasn't one you kind of breeze through. If you want to read an easy book on kind of crowd psychology, The BNB Bubble is a really good one. That's a kind of a fun read. Where this was just very dense. A couple little things from it, but nothing really worthwhile. So that was my book for the week.
Cool.
All right, I think we wrapped it up.
Don't recommend it.
I do not recommend. No, I do not.
So I give a comedy book and you give a finance book we don't recommend. Good stuff out of us this week.
Yeah, killed it.
Killed it. Damn, nice. Quick one this week, huh?
Yeah, that's it.
All right, wrap this thing up. Like, subscribe, give all that good jazz, guys. See you next week.